House hacking. What is it? I know a lot of people have talked about this or are talking about this in the mortgage industry and the real estate space. What's going on, guys? Ivan Simental, your mortgage advisor, and today we are going to be talking about house hacking. We're going to go over some strategies, we're going to go over some implementation that you can take advantage of, and tips and tricks that hopefully will be helpful for you to take advantage of in today's very competitive market. So let's talk about the definition of house hacking. What is it? So the definition essentially of house hacking is purchasing a house or a 1 to 4 unit property, living in one room and renting out the other rooms. Now, what is the benefit of this? Well, it alleviates a lot of the payment that you have to come up with. So for example, say if you live in a single family house and you have a 4-bedroom, 2-bath or 4-bedroom, 3-bath house, and your mortgage on that is $1,500, $1,600. You can rent out 1-bedroom, 2-bedroom, say for $500 to $700, depending on how expensive it is in your market, and you only pay the difference. So for example, if you do 2 rooms for $500, that's $1,000. You have to come up with the difference of $500 to $600. So it takes away a lot of the burden of the mortgage payment so that you can invest it somewhere else, or that you can create a savings or an emergency nest fund, or whatever you want to do with the extra funds that you will have in house hacking. So why has house hacking become such a popular term and a popular thing? Well, because the house values are going up. And if you're trying to save for that 10 to 15, 20% down, you are going to be saving for a very long time because the values are increasing so fast. So if you are in a position to currently purchase a house and don't want such an expensive mortgage payment, house hacking is the way to go for you because, as I mentioned, you will only be responsible for a portion of your rent mortgage payment, but you still, in case of an emergency, can afford that mortgage payment. You just don't want to be responsible for the entire mortgage payment. So that is why you are house hacking. That is the biggest benefit to house hacking, is alleviating some of that burden from the entire mortgage payment to just a small portion of it. So now let's talk about the down payment option, right? So with this house hacking option, since you will be living in the property, you are able to use traditional financing, which is your 3.5% down, 5% down options, because you are going to be living in it and it is going to be your primary residence. Another form of house hacking is, and a lot of people don't know this, purchasing a 1 to 4 unit property. So that is essentially a small apartment complex, right? Where it has 1 to 4 units on the property, where it is not commercial. It is still under the non-commercial guidelines. So it's a traditional mortgage. So what you do is you look for a 1 to 4 unit property, preferably 3 to 4 units. You purchase this property and you rent out the other units, which in return will pay for your mortgage. Right? So that is the biggest and most common form of house hacking right now. Is you're purchasing a 4-unit property, you live in one of the units rent free essentially, and the other 3 tenants will pay for your mortgage. Now, after a year, if you'd like, you can take advantage of another first-time homebuyer program. You could take advantage of another low down payment option program because you'll be moving out of this 4-unit property. So you'll be moving into a single family residence. And now that 4-unit property is generating 4 rental payments that are paying for your mortgage essentially, plus a little bit of profit. That is one of the most common and most traditional forms of house hacking. So now I want to go over house hacking versus traditional investing, because you're now becoming an investor if you're using this house hacking method. So with house hacking, one, you get to take advantage of the lower interest rates because you are, remember, living in the house. So it is your primary residence, but you get to take advantage of the lower interest rates versus if you're buying an investment property, rates are typically higher for investment properties. Number two, the down payment options. Because again, this is going to be your primary residence. You get to take advantage of the low down payment option versus if it was an investment property, you have to come in with a minimum of 20% down. And number three, it is easier to purchase a primary residence than as an investment property because there are additional qualifying factors when you're purchasing an investment property versus a single family residence. There's still a lot of paperwork that will require and still the same process as buying a house and traditional financing. It is just easier to get approved traditional versus investment. So now there are a couple strategies to consider when you are house hacking. Right? So let's go over some of these strategies that you can consider when you are house hacking. Now, the first one is you live in the property for a year, and while you're living in that property, you're either renting out 1, 2, 3 rooms or 2, 3, 4 units, depending on the strategy that you used. After that year, as I mentioned, you can move out of the property and purchase another property as a low down payment option as well, because now you're leaving this property and going into hypothetically a nicer and better property. Strategy number two, like as I mentioned, is purchasing a 2 to 4 unit property where it has apartment A, B, C, D, or apartment 1, 2, 3, 4, and renting out the other apartments and having the other tenants pay for your mortgage while you live rent free. This is mortgage free. This is the ultimate house hacking, and that is the essential goal of house hacking, is to live mortgage free and have other people pay for your mortgage. Third option that I really do not recommend, but if this is something that you want to be a little bit more aggressive on the investment side, after a year, get the property, Airbnb it. You got to find out all the rules, regulations, and things of that nature that are involved in your specific area with Airbnb. I know in Las Vegas, there are certain areas that you can and can't Airbnb, and you cannot be within a certain distance of other Airbnbs. So make sure if this is a route that you want to take advantage of, make sure that you check with your local Airbnb or your local commissioner or whoever is in charge of the permits for the Airbnb. Make sure that you check on the legalities of it so that you don't buy this property thinking that you can Airbnb it. And here comes a year later and you can't Airbnb it and you are stuck with the property renting it out traditionally where you thought you were going to be able to Airbnb it. And the last option, which is very, very aggressive, is a fix and flip. If you are not familiar with fixing and flipping properties, I strongly suggest that you stay away from this because it is higher risk. Of course, there is more of a reward as well, but it is a riskier type of investment because there are purchasing the house that you need to make sure that your numbers are good, that you're still going to make some money when you sell it. Material costs, construction costs, managing the crew, setting proper expectations, materials, and all that good stuff that you're going to put into the property. So there's a lot of things that you need to take into consideration when you are doing a fix and flip. I know this because I've done a couple and they are a lot. They are fun once the finished product is out, but they are a lot. I wanted to also go over some other options for you to take advantage of if you are in the military and if you are in the USDA area. So there are a couple other ways that you can also take advantage of house hacking. And one of those ways is if you are a veteran or if you are an active military member. You also get 100% financing if you are in the military and active or honorably discharged, or if you have your VA benefits, you are able to partake in 100% financing. Now, again, you're purchasing a house, still using this same house hacking strategy that you can take advantage of. And it's the exact same thing, but very little money out of your pocket. So you purchase this house, and you have other people pay your mortgage essentially. It's the same concept. It's just you have 100% financing available at your disposal because of your VA benefits. So same exact parameters that I kind of went over. The only difference is that you only pay your closing costs versus your down payment and closing costs, which is awesome. Along the same lines is USDA financing. Again, It's 100% financing, and you can also take advantage of the same parameters that I kind of went over with VA and the traditional low down payment options. But it's 100% financing, and all you have to do is just worry about qualifying, of course, and your closing costs. But it's the same concept. You rent out a couple of the rooms and hopefully either pay for the majority of your mortgage or all of your mortgage. It just totally depends in what area you are in. Guys, this was it for house hacking. I hope you found this information valuable and informative. And if you did, please hit the like and subscribe button below. We are doing this just for you, to provide value, to educate you. And if you guys have any other type of content that you guys want to see, or if any specific type that you'd like us to talk about, leave it in the comments below. We would love to hear from you. And as always, we appreciate you taking time out of your busy day to spend it with us. Thank you and have a wonderful day.